Good morning. Today we are going to study RTP cases on service tax and excise. There are some 5-6 cases. So in this session we are going to study these cases on service tax excise, and in the next session which we'll be conducting tomorrow, we'll have cases on customs and common topics. So first we'll start with two cases on excise. First one is based on the definition of manufacture. So manufacture, yes, if you remember the definition of manufacture, so in the Act they have given definition of deemed manufacture. But as per some case laws, we have drawn conclusion that manufacturing is any activity which results in a new and distinct commodity having distinctive name, character and use. So the first case study which is given in your RTP is Junnarkar Petrochem Limited. Please write down. I'll dictate the facts and the conclusion. Just 2-3 lines will write for each case, so that it's very easy for you to for the last day revision. The first case is Junnarkar Petrochem Limited. It's not a court case law, it is advanced ruling. Still it's there in your RTP, so you have to do that. So write down. It imports coal from outside India. It imports coal from outside India and crushes the same. Since no new product comes into existence, it does not amount to manufacture. Therefore, excise duty is not payable. Excise duty is not payable. Now please keep in mind that this particular thing, whatever we are doing right now in class, don't write only this much in exam. This is only for your quick revision. So in exam you have to write very elaborate answer discussing each and every point. Please go through the RTP cases also. Here we are doing only the conclusions. Second case on excise is Tavent Technologies India Private Limited. Okay, so if you remember rule 19 of Central Excise Rules, it is given that if goods are exported out of India, then duty is not payable. It is duty-free exports. But whatever is the Senvat credit relating to inputs and input services used for manufacturing of such goods will be available as refund under Rule 5. Now, if you are a manufacturer who is only exporting goods, then in that case, registration is not required. So the question is registration required if you want to claim this refund? So under this particular case law, the High Court had held that registration under Central Excise is not required. So write down again. So you have to quote two rules here. Rule 19 of Central Excise Rules. You have to write brief points about this. Then write about Rule 5 of Senvat credit rules, that how these two are interlinked. Then you have to write about the registration formalities of relating to Central Excise, that in case if you are only exporting goods and not clearing in India, then registration is not required. So it was held that registration is not required for claiming the refund as well. So write down. If goods are exported duty free, then registration under Central Excise is not required. Registration under Central Excise is not required. If Senvat credit on inputs and input services, is to be claimed as refund, then still registration won't be required. still registration won't be required. So these are the two new cases on excise. Now we have three more cases on service tax. So we'll study those three cases. So the first case on service tax is based on place of provision of service rules. So the by default, or we can say the residual rule, is rule 3, which says that in case of place of provision, what is the place of provision of service in case of any service? It is a location of service receiver. But rule 9, which talks of intermediary service, the POPS is place of provision of services, location of the service provider. So the case law name is universal, and it's not a very simple case law. So please write down everything. Universal Services India Private Limited. Universal Services India Private Limited. So we'll just write down the basics about that particular company, who is not the SSE, but you have to write down WWD US based company is providing service of name registration then designing web hosting, etc. to Indian customers. So they're just designing and everything for the Indian customer. But now when the Indian customers want to make the payment to such company, there was no processing facility available. So what they did, they appointed Universal Services India Private Limited to accept the payments. So write down, Universal will provide payment processing facility to WWD. Okay, so now there are three parties involved here. If you see, the first party is the main service provider is WWD. Second party is Universal. And third party is customer. Now who is making payment to whom? Customer is making to Universal and Universal to WWD. And for that purpose they might be charging some amount and then deducting that amount and then giving balance, or maybe entire balance is given to this WWD and WWD is again giving some profit plus cost. But what is the service flow? Who is providing the service to whom? Again same, WWD, Universal and customer. So who is providing service to customer? Is it Universal? No, it's WWD to customer, and Universal is providing service to WWD. Now the main point is, for this service provided by Universal to WWD, see right now we are concerned only with Universal Services India Private Limited. We are not concerned with this service. So just check up this service. WWD is receiving service from Universal. Now will rule 3 apply of place of provision of service or rule 9? Department thought, or department stand was that Universal was acting as an intermediary of WWD. Therefore rule 9 should apply. And as per rule 9, place of provision of service is the location of the service provider. Since Universal is located in India, the service would become taxable. But it's not that. The High Court held that the transaction is between principal to principal. In absence of all the specific rules, the general rule will apply, and place of provision of service will be location of service receiver, that is outside India. And obviously this is import of service, export of service also. So export of service, what are the conditions as per that service tax rules? location of the service provider should be in India. So is the service provider here universal? Correct. Service receiver is located outside India. It's not in non-taxable territory. It's outside India. Then service is not specified in negative list. So this payment processing service is not specified. Then consideration is, yes, place of provision of service is outside India. Consideration is received in foreign convertible foreign currency, and they are not establishment of the same entity. Since all conditions are fulfilled, this amounts to export of service, and therefore service tax is not payable. So this is a very important service. So write down. I hope you have written this. If you have not written, just scroll back and pause and use. Please write down this. I'll dictate the next thing. Yes, write down. POPS is place of provision of service. Don't use this in exam. This is only for your quick understanding. So POPS for service provided by universal to WWD is location of WWD is rule 3. It amounts to export of service. Therefore, no tax payable. Therefore, no tax payable. Now, this is a very, very important service, because if you can see, the institute can form a very good case law based question on this. They can add a lot of mirch masala to this, and the question might look very lengthy. But you have to concentrate on the facts, that how the payment is being given by whom to whom, and also the service flow. And this conclusion, if you keep in mind, then you can easily answer this question. The next, second last case law on service tax is Federation of Hotel and Restaurant, Hotels and Restaurants Association of India. Now this federation challenged the constitutional validity of service in case of service tax on service portion on supply of food and beverages. So here the High Court said that even if you are paying sales tax on the goods component, and we have specifically given in the valuation rules that restaurant service will be taxable, or the value of taxable service in case of restaurant service will be 40% of total amount charged, and in case of outdoor catering it is 60%. So since there is a specific valuation rule, the service component is specifically given, therefore this service is constitutionally valid. So write down. Now again this very important service, so please highlight. Service tax on supply of food service into bracket restaurant and outdoor catering is constitutionally valid. As valuation rules have specified the taxable portion of the total amount charged. Of the total amount charged. Okay, now again a case law which takes into consideration some same point and which is contradictory to this case law because of some mistake, or we can say some defect in the law. So let's take up the next case, Suresh Kumar Bansal. I'll dictate some facts, you write down, and then we are going to discuss. Suresh Kumar Bansal. Individuals entered into agreement with builder individuals entered into an agreement with builder to buy flats in a housing project. To buy flats in a housing project. The value of flat was inclusive of value of land. Value of flat was inclusive of value of land. Now here, very important decision. This High Court said that in that particular price, there was some service component as well as sale component. There was component relating to goods, then component relating to land also. So you should charge only on the service component. Now, in case of works contract, you have the distinction between sale and service, where they have given that you have, in the valuation rules, they have specified two options. First option is you have to reduce the amount on which you have paid VAT. And the second option is for original contract 40%, and other contracts you have that 60%. But in case of this construction service, you don't have any reference in the valuation rules. So write down this important one. The value of flat, okay, just once change. In case of other works, it is not 60%, it is 70%. Just one mistake. Okay, so write down. The value of flat was inclusive of the value of flat was inclusive of value of land. I think it's written up till here. So write down. Continue. There is an abatement specified for construction service. There is an abatement specified for construction service. But there is no specific mechanism. But there is no specific mechanism in valuation rules. In valuation rules to segregate the value of land from the service component. Value of land from the service component. Therefore, service tax cannot be levied. Therefore, service tax cannot be levied in absence of specific mechanism. In absence of specific mechanism. So if you see the case laws, this Federation of Hotel and Restaurant Association of India, what is given there? That since there was a valuation rule to segregate, that was constitutionally valid. Whereas in Suresh Kumar Bansal, it is given that for construction they have not given any valuation rule. That's why you can't split up the service and the sale component. So in that case, it was held to be constitutionally invalid. So once there is a change in the law, where there is a specific valuation rule for this construction service, then this particular case law will become invalid. But the possibility of that is very rare, because in few months we will be having goods and service tax. So these things will be taken care of in the new law. Understood this? So tomorrow we are going to study few cases on customs and common topics.